Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, March 7th, 2016. Well, take a look at oil today. Oil popping above the $10 USO level. Spot crude finally hit a target that we gave out here at InTheMoneyStocks.com literally months ago. When we were trading near $26 a barrel, we talked about oil rallying to $38 a barrel. That was the key level. That was what our analysis showed. Guess what the high on oil was today? You guessed it, $38 per barrel. So that tells me that oil is now going to run into some heavier resistance. It should be stalling out in this vicinity. Could it pierce above a little bit? Sure. But ultimately, I expect oil to stall out here and start to turn back to the downside. The other reason you know this is going to happen is if you look at a lot of the small cap oil plays, they've had these insane squeezes that cannot hold up. So take a look at SDRL. All right, look at this chart on SDRL. The stock was literally $1.50, right? $1.50. It goes to almost $8 on Friday. That is an insane move, an epic short squeeze, and that's something that will come back in. So I expect SDRL to actually fall all the way back to about the $3 level or just sub $3. And that could happen pretty quick. You see any sort of weakness in oil where oil starts to sell off heavily, and you will see this come in very, very quickly, folks. All right, the other charts out there, I mean, look at Chesapeake, same thing. Chesapeake's had a meteoric run just in the last 4 trading days, going from $2.50 to essentially $5.50. That's over 100% run. Incredible. You also have stocks like U.S. Steel. Look at that, right into the 200 moving average. Okay, Freeport-McMoRan, right around the 200 moving average. Alcoa, into the 200 moving average. I mean, think about Alcoa. Alcoa, one of the biggest aluminum players out there, if not the biggest, went from $6 to essentially $10. I mean, that's an incredible move, folks. I mean, that's essentially, you're talking about a 65, 66% rally on the stock. Incredible. In just basically, a month and a half off the lows, and so much recently here. Such a big, big move up. So again, what I'm telling you right now, I'll summarize it very simply. All right, these charts on these stocks are going to pull back. They're going to pull back because oil has hit its zenith, its high pivot in the short term. I don't know where it'll be 6 months from now, but short term, $38 a barrel was the target we were looking for. It's all coinciding because if you look at a stock like SDRL, it's not going to stay up here forever, right? It's going to start to retrace some of this move. The only way it's going to retrace is if oil comes back in a little bit. I mean, if oil keeps going higher, this is going to hold up. It's an oil stock. So it tells us that ultimately oil has to come back in, which will then bring these crazy charts back in, and you will see everything just deflate just a little bit again. All right, I'm not necessarily looking for oil to go back to $26 a barrel. What I'm telling you is it probably heads back to about $32 to $30 a barrel before potentially making another move up. Okay? So again, the way you play this, in my opinion, is if oil sells off, the markets sell off. I think the smart move here is to be short the markets overall. If you're gutsy, you can buy puts on stocks like SDRL. Just notice their premium. You want to make sure you're not paying a crazy premium. I'm sure they do have a crazy premium at this point. But ultimately, I mean, you could short those type of stocks, but ultimately I think just being short the market or buying some short ETFs like a QID and SDS type stuff, that would be more than sufficient to capitalize on what I think is going to be a pullback in this market. Also, if you go to the spiders, I have a lot of lines on my trend line here on my chart, but look at the 200 looming here. Look at this massive move up from 181 to basically 201 on the chart, 20-point move, which is over 10% on the markets in a short amount of time. 200 looming right up here. Could the market inch into that 200? Sure, but it's so close it doesn't even matter. Ultimately, you're going to get a pullback in this range, and I expect the markets to pull back to about the 193 to 194 level on the SPY. All right, folks, this is what it's all about, folks. I mean, bottom line is I have a reputation here of nailing market moves, and we're making money left and right. I want to show you this. Check this out. Here's the website. I want to show you the track record, our track record. Go here to Research Center, which is our swing trade alerts calls. Live calls given out. Click on that. All right, we'll center the page here. There we go. Go down here, 7-day free trial, everything you get, and right here is the track record. Click on that. Look at our track record so far this year, guys. 204% net return. Okay, that's basically in 2 months, right? January and February, we're just at the beginning of March, and look at these. We have a couple losers because again, it's losers and winners together. But the point is, look at all those trades in 2 months. Look at that net gain for 2016 right here. That is incredible. All right, even if you just put 10% of your portfolio in each position, you're making over 20% in 2 months. You're on pace to do 120% for the year. And that's only putting 10% of your money in each trade alert. That is awesome, folks. That is absolutely phenomenal. And we do this every single year. You can go back and look at past year track records, 2015, 14, 13, 12, all the way back here. And these are verified third-party track record results, meaning that someone's tracking them, making sure that they are correct. And sure enough, here you have them. So awesome stuff, guys. Here's your Research Center track record. Just go to Research Center under Investor Trade Alerts, click on that, and you can take the 7-day free trial right here. Take care, folks.